Hi traders, this is a daily forecast on dollar yen. Today's Friday, January 7th. This video is created by Finteria Markets. Please check our website. There you will find many interesting tools, educational materials, and all the information on trading conditions. Let's start our analysis with a tool which is called currency strength. And we're going to pay attention to the performance of the dollar and the yen. So first of all, let's start with the dollar and review the last 24 hours. We can see that the dollar, it's the green line on the chart, has been very stable. It didn't move really much. The Japanese yen was the second weakest currency. However, this is more related to the correction that we've seen after the strong risk aversion in the markets. So let's also switch to this week. So basically, we're seeing the tendencies since the beginning of the week and beginning of the year. So we can still see that the US dollar is the strongest currency. It's the second strongest currency. The Japanese yen is in the middle. So it had lots of volatility, lots of ups and downs. So we do not have a clear tendency in the Japanese yen right now. And I think that the market confidence is a bit shaken. The current situation is slightly fragile, in my opinion. So far we're seeing that S&P index is gradually decreasing. It fell by 0.3%. So I think that the signal from the Fed that they are considering to increase their rates in March and also reduce their balance sheet is a very strong message for the market. And I think that we may actually see further correction in the stock market. And of course, this can result in the further risk aversion happening today and potentially next week. So that's why I'm not really looking into the longs, into the short positions, into shorting the Japanese yen. In my opinion, in this environment, we need to be more careful and cautious. So let's start with the technical analysis. First of all, the long-term chart, as we can see, we're above the level 114.70, which was a 4-year high. The long-term target is still here at 1860. So in my opinion, over the long term, we may potentially move in this upward direction. But so far, we're stuck into two daily levels. So above we have 116.40, and slightly below we have 115.50. So here from one hand, we have this trend line. We have a strong daily support level. But anyway, I wouldn't recommend you to consider long positions from this level. You could actually do it from slightly above, from 115.70 or from 115.60. I think in case if we approach this level once again, we potentially may break this level. So I would say that longs can be considered slightly lower from 114.30 potentially, or somewhere in the middle, depending on the technical situation. But so far, I'm hesitating to go longs. I think long positions should be considered in case only if the market confidence will be restated. I mean, the market confidence will be back to the markets. So that's why I think that the best idea would be to consider longs after we break again 116.40. We move above this level, and then we can consider long positions once again. In case if we approach this level, in my opinion, there's some chance that we may actually break or move below this level. So I wouldn't recommend long positions before 115. Potentially from 115, we can consider and think about long positions depending on the situation and how the situation evolves in the future. I think that it would be better to consider long positions from the depth. So basically, that's it for today. I hope you enjoyed this analysis. Please leave your comments and questions below the video, and also subscribe to our YouTube and Telegram channels. Thank you for watching, and I wish you a nice day.